Here we are again. We call it Daily 5, I guess. I'll try and get through 5 markets. This is Andrew Cardwell, and we've had a lot happen in the last couple weeks. This past week was kind of wild, and I even sent out a comment to some of my Twitter followers and clients that it was a wild week. Markets moving in both direction. A little bit for everybody. If you're long, you're short, you're sitting out, just watching. Don't be scared. Understand markets. Learn how to read what the charts are telling you. But we can start off with what do we say? S&P and stock indices, because I think we got some interesting things getting ready to happen. A lot of times, if you're using RSI, people are taught the classic. My approach is a little different, but based on everything that Wells taught originally. But when let's take SPX, we'll go to, you can see it's been in a strong trend to the upside. But I think we're getting a little ahead of ourselves. And it would not surprise me to see, we got up into the highs, but the highs are not, we've got a little bearish divergence up in here. This third chart down is my CFG. That's my personal RSI. And it's a little more sensitive than the RSI is, but it's based on all the RSI principles and a couple others I've added. But this bottom chart is a 20 period simple moving average of the CFG. We've got a longer term divergence in there, and it's starting to roll over and turn down. Now, what you will notice too is that sometimes a market will make a momentum high, but doesn't make a momentum high or a momentum low in terms of RSI, but it does not make a bull or bear divergence. And we're seeing this in some stocks as well. But on the cash side here, this has been a strong move to the upside, but the RSI is almost fighting to get it back above 70. And that usually, to me, over the last 40 years that I've been watching it and using it, as an indication that it could be ahead of itself. Don't use the words frosty, but you've got one divergence and you got another one, but they're not above 70. Doesn't have the strength to get above 70 on a weekly. The daily got up to what here? 65. Now it's having trouble getting back above 60. And that's the top end of a bear range. We've turned down. The moving averages have turned down. The CFG has turned down. And even my 20 period moving average on CFG, I just call it the 2045. It's crossed to the downside. So I think with coming into next week, we could see some more fireworks. I would not be surprised. I've told a couple of my students that I would not be surprised if we gap down tomorrow on the S&P, possibly the Dow, possibly NASDAQ. But we could gap down and make the highs for the week tomorrow or Tuesday. I think it's that much ahead of itself. One thing I noticed too, and I've passed it along to others, is Bitcoin tends to lead the stock market. And if we look at the daily Bitcoin chart, we can see it made its high when the RSI got all the way up to almost 80. Now it started to turn down. All the moving averages, the 2045 is crossed. So I think we could see some fireworks next week where we get more downside in Bitcoin and more downside in some stocks. I'm still, as I have been, very positive with the CRB Index and thinking that commodity inflation is going to be coming through. And we're going to see higher commodity prices. I've been long coffee, sugar, crude oil, beans, wheat, cotton. So most of the commodity complex is starting to turn a little higher. And my inflation point was last summer. I started noticing how it was coming up. CRB here, and I'm going to check because my data service has got this as all these closes are the same, and that's not possible. But if you look at each one of the commodities I mentioned, most of them are starting to trend higher and are moving to much higher levels. We can see coffee go over 250 or over $2, possibly 250, 275. We could see beans hitting 17.5, 18, cotton at $1.05. So some of the base commodities we're starting to see turn higher. 10-year yield. Okay, let me find 10-year. Here's the 10-year yield, and that had been moving up. And I trade the 30-year bond, which moves inversely to the yield, and seeing that start to sell off, and it's been in a downtrend as we've had these yields climb higher. So I think we have seen the bottom in interest rates, but I don't think it's going to affect commodity prices as much. We had a big reversal day on Friday, and the yields dropped quite a bit, and the futures rallied, but they're still pretty much staying in below 60, which meant futures down and yields up. And even though the Federal Reserve said they're not going to be raising rates until 22 or 23 even, we've had a shakeout in the bond futures as we've seen that yield rise. Gold has had a big move over the last week or so, and a big shakeout over the last couple of weeks. And I think that's going to be probing for a bottom this month. And a lot of times you can look at markets the first week of the month, the first few days, and see important highs and lows put in. So we may be looking at some lows coming in on some of the commodity prices we're talking about, and also on the gold and silver. And I still think silver will outperform gold on the upside. The I had one other comment. What was it? Dollar index. Still long-term bearish. I don't see any reason to change. When we were back in January, I had targets down below 89 or 89.50. We got below there, we bounced. But if you look at this line, and this is a technical term, you look where a bottom was, if it becomes a top, it's still in that downtrend. And that's what we had. The lows from September of last year became the highs in early February. So I wouldn't be surprised to see the dollar reverse this week too and turn down. And one last one was the Bitcoin, because everybody's into Bitcoin. I've heard targets at 100,000, 200,000, and I follow the charts. I let the chart show me what it wants to do. But we had quite a run up, and it accelerated. And okay, I see we got like a minute left. The lowest we got to was around 42. So it could still be in this 80-40 range, but the way it's starting to roll over and turn and has fallen off, I think too many people has used that term, it got overcrowded, because more and more platforms are starting to accept Bitcoin. But I just want to give you an update. A lot of the things haven't changed, and we're going to see some change in some other markets going forward. So it's going to be an exciting year. I think we're going to have this commodity trend be with us for at least the next 2 to 3 years of commodities moving higher, and maybe stocks just work sideways. But that's all I have for today. If you want to get a hold of me, you can go to cardwellrsiedge.com or trader011@msn.com direct email. Take care, enjoy the rest of the day, and good luck in your trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.